Aloha, good morning. This is Caron Davis of Caron Realty International. Trust everyone's had a great week. We are extremely busy. I realized this today. I actually have 7 appointments, but I'm ready to go. That's my exercise today. But anyway, with that aside, I thought it'd be a great time to catch up with what's going on in the economy, mortgage rates, giving examples of creative financing. And I have my dear friend Duncan here again that we've met many times. I hope we give you some good information. And if there's something specific that you may have a question on, please reach out to myself or Duncan, because there's lots of different programs available out there. So with that, Duncan, I'll let you update us on everything going on right now.
Sure, happy to do so. Thanks, Caron. So the economy has been humming along. There have been signs of some weaknesses in some reports, but overall, the economy's been holding up pretty strong. Inflation has stayed pretty subdued and has been trending lower. There was a PCE report that just came out that showed inflation slightly higher than the month before, but still in the twos, still trending lower. And I expect inflation to continue lower into next year. The big wild card is tariffs, and people don't know what the tariffs are going to end up being. There is a deadline, July 9th, coming up, where the tariffs are supposed to be implemented across the board. That may end up being extended or changed. But at this point, there's expectations of a tick up of inflation, and that may be why the recent report showed a little tick up based on prices going up from tariffs. However, there have been a couple of Federal Reserve Board governors that have come out, and I agree that they shouldn't be considering the tariff inflation when they set the Fed policy, because that's a short-term one-time effect on inflation. It's not sustained inflation. When you have investors looking at bonds and long-term rates, they're looking at what you can buy with a dollar today versus 10 years or 30 years from now. And if you have tariffs implemented now, I think 10 years from now, those tariffs, the effects of those will be dissipated, and prices may be lower 10 years from now, than because the tariffs might be gone by then, or not, or at least lower than they'll be once they're implemented later this year. So overall, tariffs will likely slow down the economy depending on how much they are implemented, because that is basically reducing people's buying power by charging more for goods. And so we could see a recession caused by them, depending on how much they're implemented. That would cause rates to go down, and that would cause unemployment to go up. We're still at a very low unemployment rate, so we're not likely to see a recession like we had in 2008 or the big recessions, but much more likely to have a more shallow recession. We also have higher productivity now because AI has been used to help companies become more efficient. So overall, we have an economy that's still pretty strong. We have inflation trending lower. Rates, I think, will continue lower, and expect more next year. But later this year, we expect a couple of Fed rate cuts later this year, and we expect rates to move lower, long-term rates and short-term rates next year, when we should see the inflation drop even further. So that's just in a nutshell where the economy and where rates are, and home prices are still very strong, at or near all-time highs. And so we have a supply and demand issue where you don't have enough supply, and home builders aren't building enough homes now just because there isn't as they're worried about what's going to happen with the economy. So they're not building enough homes to meet the supply requirements. So we're going to see home prices stay strong because of the supply demand, where you have the baby boomers and the millennials wanting to own homes at the same time. And a lot of millennials have been delaying their first home purchase, but they're getting old enough where they'll bite the bullet and realize that the rates that we have now are more normal than the rates we had a few years ago, which were unusually low. I think we will get lower rates, and maybe not as low as a few years ago, but we will see rates trending lower. But I think people are realizing that it's more like a normal level of interest rates now than it was a few years ago. And so
can you give me like jumbo rates? What's the range you could expect right now?
Right now, jumbo rates are, depending on the down payment, credit score, and all those factors, basically in the mid to upper sixes. So which is basically better than the long-term average, or about the same as long-term average. I remember when I bought our house in the 90s, it was average rates were in the eights, And so we're just getting back to the levels where they were before the big drops and the quantitative easing and all the things that have been done the last couple decades with interest rates.
And then when I say jumbo, that's a mortgage of what amount, just so people understand?
Yeah, so 1 point in Hawaii, 1,209,750 is the current max loan amount for a conforming loan. So above there is considered jumbo, and that changes every year. So that'll change later this year, but that's where it is currently, a little over 1.2 million on the loan amount. So speaking about financing options, we've recently had some situations where there are some unusual products that we've been able to use to help people to buy places. So for investors, for example, we've got a DSCR loan, which is a debt service coverage ratio loan, where you use the rental income from the property to qualify, not the borrower's income. And it's hard for the mortgage payment to be covered by the rental income for most properties in Hawaii, unless you have an enormous down payment, because most of the value is in the land, and the property values here appreciate and stay strong because there's such limited supply, and and the land is much more valuable than a lot of places on the mainland. So we have a product where a DSCR ratio can be supplemented by asset depletion. So if someone has assets besides the down payment, and it can be an investment accounts or retirement accounts, those can be used to increase the DSCR ratio, whereas most don't get to that one ratio where you have the rental income covering the full mortgage payment. A lot of times we can do that now with the asset depletion from their assets being used to supplement that DSCR ratio. I just recently closed 2 loans like that, where the borrowers, in one case, the borrower bought a place for a little over 400,000. Appraisal came in well over 500,000, and we were able to do a DSCR loan, supplement the income, boost the DSCR ratio from 0.73 to over 1.2, and they got much better terms, much better approval. And the same loan program doesn't require a seasoning. Recently, Fannie Mae and Freddie Mac in 23 increased the seasoning requirement to 12 months from when you buy a place and until you get cash out refinanced using the appraised value. This bought a property with cash, and a month later, they did this cash out refinance, and were able to use the higher appraised value over 500 to get cash out that was 92% of what they bought it for. So it's almost like.
So I think, yeah, and sorry to interrupt you, but I think the moral of the story, if you're sitting on, an investment property and you do want to get some cash out, there's loan programs available out there. Or of course, if you're buying an investment property, and
right. So I know there's a lot of
investors, if someone's retired, they can look at the, cash flow of the property versus their income.
Yeah, so this program allows someone to use a BRRRR method where they buy, rehab, refinance, and repeat, and accumulate properties and leverage their cash. And so it's a great program, not having to have a seasoning. You can do light renovations and get a higher appraised value really quickly, and get the cash out really quickly, and then apply that to do more purchases. Nice. And then for people that do own their own properties with a lot of equity, there's a lot of different options. I've talked before about HELOCs. We talked before about a 5-day HELOC where you can close a HELOC in 5 days or less. And I did that myself last year on a 3-day. I got my funds in 3 days on an investment property. Wow. And nice. So there's those options. There's another automated AI option that's almost as fast. So we got a couple different options now to allow people to qualify more easily. And they can qualify for those HELOCs a lot of times where they can't qualify for a regular conventional HELOC because the guidelines are a lot more flexible. And sometimes on buildings that they can't qualify for a HELOC on, like we can do it on condo hotels and certain buildings where we couldn't get a conventional loan, or a property that's not in great condition because doesn't require a full appraisal. So there's all kinds of things that allow people to tap equity without going through the full conventional loan process, conventional HELOC process that takes a couple of months, and doing a full appraisal and all that. We have a couple of loan programs that don't require a full appraisal, as well for a first mortgage that use drive-by appraisals for any amount if you have at least 30% down, or you can put a lot less down if it's a 400,000 or less purchase. So we've got different options for different situations where an appraisal would not work on a property because of the condition of the property. And then for a lot of the condos now don't have sufficient hurricane insurance, and so we've been able to close a lot of those loans because we have several lenders that can still close loans in those buildings with rates that are not that much different from a conventional loan. So we've been doing a lot of business with those, and then some condos that have litigation as well, where a conventional loan wouldn't work. We have lenders that can do those. And then we're recently doing a condotel loan where the condotel does not have a front desk, doesn't have hotel amenities, so the lender is able to treat it as a non-warrantable condo. So you can buy with as little as 20% down with much better pricing than you would with a normal condotel loan. We also have a situation where one borrower has a higher credit score, another has a lower credit score. And normally on conventional loans, you have to use the lowest credit score. But for this program, you can use the higher credit score. So this allows you to get better pricing and higher approval odds if you can use the higher credit score. So there are different situations where you don't have to meet the requirements of a regular conventional loan, and you can get better terms than you would otherwise.
Wonderful. Well, I think, thank you, and we could talk forever. I think we'll have to have another session in the next month because there's just so many changes and so many programs right now. But just, next week, of course, is 4th of July, and I'm sure everyone's looking forward to a shorter week next week. And, summer's here, and I'll share some of Marianne's photos that we do every week. And, signs of summer is here. And, of course, the plumerias are just out there beautiful. I know we have some outside in our yard, gorgeous to see those every morning. The shower trees, around town, absolutely stunning, all the different colors. And of course, beach time, people out at the beach. I mean, absolutely. It's so nice to see people enjoying themselves with families and the kids running up and down the sand. And it's just incredible. And the canoes, which is a big part of our summer fun here in Hawaii. And I know Doug, my husband, that's how we met, actually, canoe surfing. He took me canoe surfing one of our first dates. I don't do it anymore, but back then I was a little more adventurous, canoe surfing. But I just want to wish everyone a happy 4th of July, and thank you everyone for all your support with our business. We really are having an amazing, successful year, and I just want to thank everyone for believing in us. We're very dedicated, as you know, and along with Duncan, he's helped me get certain situations financially for my clients repeatedly, and it's a breath of fresh air, and it sort of just relaxes everybody to know there are options out there. But with that, much mahalo, have a lovely weekend, and happy 4th of July next week. Aloha.
Thanks, Caron. Thanks, everybody.
Thanks.